Warren Buffett is one of the richest investors in history. Today, his net worth is worth tens of billions of dollars, but his journey didn't begin with wealth. It began with curiosity. As a child, Buffett was obsessed with making money. He sold chewing gum, Coca-Cola bottles, magazines, and anything else he could profit from. While most kids were focused on toys and games, Buffett was already studying business and investing. But here's what's truly remarkable. Buffett didn't become wealthy because he had a high salary. He didn't build a tech company. And he didn't get lucky. Instead, he followed a set of simple principles that allowed his money to grow year after year. Principles that almost anyone can understand. Today, we're going to explore the wealth secrets that transformed Warren Buffett from an ordinary boy in Omaha into one of the most successful investors the world has ever seen. One of Buffett's biggest wealth secrets is surprisingly simple. He started early. Most people underestimate how powerful time can be. They think investing is all about picking the perfect stock or finding the next big opportunity. Buffett understood something different. Time is often more important than talent. When he was just 11 years old, Buffett bought his first stock. It wasn't a perfect investment. In fact, he made mistakes. But that's not what mattered. What mattered was that he got started. Every year you delay investing is a year compounding loses the opportunity to work for you. Buffett's greatest advantage wasn't intelligence alone. It was having decades for his investments to grow. His story teaches us that starting imperfectly today is far better than waiting for the perfect opportunity tomorrow. Buffett often credits much of his wealth to one powerful force: compounding. Compounding happens when your money earns returns, and then those returns begin earning returns of their own. At first, growth appears small, almost invisible, but over time something incredible happens. The curve begins to accelerate. What starts as a small snowball eventually becomes an avalanche. Most people never experience the true power of compounding because they stop too early. They focus on months. Buffett focused on decades. His wealth wasn't built overnight. It was built through patience and consistency. The lesson isn't that you need billions of dollars. The lesson is that even small investments can become meaningful if given enough time. Compounding rewards patience more than almost any other financial strategy. Many people think investing is about buying cheap stocks. Buffett disagrees. He believes it's better to buy a wonderful business at a fair price than a fair business at a wonderful price. Why? Because great businesses continue creating value. They have strong brands, loyal customers, competitive advantages, and long-term growth potential. Buffett isn't interested in gambling. He's interested in ownership. When he buys shares, he thinks like a business owner. He asks simple questions. Would I want to own this company for 10 years? Does this company create value? Will people still need its products in the future? This mindset separates investors from speculators. Buffett focuses on quality first, price second, and that approach has helped him build extraordinary wealth over time. One of Buffett's most famous advantages isn't intelligence. It's patience. Most investors want quick results. They buy when prices are rising. They panic when prices are falling. And they constantly jump from one opportunity to another. Buffett does the opposite. He's willing to wait, sometimes for years. He understands that wealth creation is usually slow before it becomes fast. Patience allows compounding to work. Patience allows businesses to grow. Patience allows markets to recover. This is why Buffett often says his favorite holding period is forever. He's not trying to get rich this month. He's focused on building wealth over decades. And that's a mindset most investors struggle to adopt. But it's also one of the most powerful lessons Buffett teaches. Another powerful Warren Buffett secret is knowing what not to invest in. Most people think successful investing means knowing everything. Buffett believes the opposite. He focuses only on businesses he understands. This idea is called the circle of competence. Imagine a circle containing all the industries, products, and businesses you truly understand. Inside the circle, your decisions are stronger. Outside the circle, you're guessing. Buffett avoids investments that are too complex or unfamiliar. Even if everyone else is buying them. He knows that confidence without understanding can be dangerous. This is why he often passes on opportunities that other investors chase. His goal isn't to invest in everything. His goal is to invest wisely. The lesson is simple. You don't need to know every opportunity. You only need a few great opportunities that you understand deeply and can hold for the long term. Most investors run away from fear. Warren Buffett runs toward opportunity. One of his most famous quotes is, "Be fearful when others are greedy and greedy when others are fearful." During market crashes, many people panic and sell their investments. Buffett sees something different. He sees quality businesses selling at discounted prices. While fear creates losses for emotional investors, it creates opportunities for disciplined investors. This doesn't mean buying everything during a crash. It means remaining rational when others become emotional. The market constantly swings between fear and greed. Most people follow the crowd. Buffett follows value. His success comes from making decisions based on facts rather than emotions. That's why some of his greatest investments happened when everyone else was terrified. Fear often creates the biggest opportunities for long-term investors. Many investors believe complicated strategies create better results. Buffett disagrees. He believes simplicity is one of the greatest advantages in investing. Instead of constantly trading, predicting markets, or chasing trends, Buffett focuses on a few proven principles. Buy great businesses. Hold them for a long time. Let compounding do the work. Simple doesn't mean easy. It means removing unnecessary complexity. The financial world often tries to make investing look complicated. But Buffett's success proves that extraordinary results can come from simple decisions repeated consistently. He doesn't need hundreds of investments. He doesn't need constant action. He needs patience, discipline, and a clear process. In a world obsessed with complexity, simplicity remains one of Buffett's greatest competitive advantages. If there is one habit Warren Buffett credits for much of his success, it's reading. Buffett spends hours every day reading books, annual reports, business news, and financial statements. Why? Because knowledge compounds just like money. Most people want better results without improving their knowledge. Buffett understands that better decisions come from better information. Every book read, every lesson learned, and every insight gained becomes part of a growing knowledge base that helps him make smarter investments. Buffett once estimated that he spent as much as 80% of his working day reading and thinking. In a world full of distractions, reading gives him an edge. The lesson is simple. Before your money can grow, your knowledge must grow. The more you learn about business, investing, and human behavior, the more opportunities you'll be able to recognize throughout your life. Most people think in days. Some think in months. Warren Buffett thinks in decades. This difference changes everything. When investors focus only on short-term price movements, they become emotional. But when you think decades ahead, temporary market fluctuations become less important. Buffett asks a simple question before investing. Will this business still be stronger 10 or 20 years from now? If the answer is yes, short-term volatility doesn't bother him. Long-term thinking creates patience. Patience allows compounding. And compounding creates wealth. Many investors fail because they're trying to predict what will happen next week. Buffett succeeds because he's focused on what will happen years from now. His mindset reminds us that wealth isn't built through short-term predictions. It's built through long-term ownership. When you study Warren Buffett's life, a simple formula begins to emerge. Learn continuously. Buy quality businesses. Stay patient. Think long-term. And let compounding do the work. Notice what's missing. There are no shortcuts, no secret indicators, no overnight success stories. Buffett's wealth formula is built on timeless principles that have worked for decades. Most people search for complex solutions. Buffett focuses on simple principles executed consistently. That's why his strategy can be understood by almost anyone. The challenge isn't understanding it. The challenge is following it. Because successful investing often requires doing the opposite of what emotions tell us to do. Buffett's formula isn't complicated, but it requires discipline, patience, and consistency over many years. You don't need billions of dollars to apply Warren Buffett's principles. You don't need a finance degree, and you don't need to predict the future. What you need is the willingness to think differently. Start investing early. Focus on quality assets. Continue learning. Stay patient. And give compounding enough time to work. These principles helped transform Warren Buffett into one of the most successful investors in history. And while your results may look different, the same foundations still apply. Wealth is rarely built through luck. It's usually built through good decisions repeated consistently over long periods of time. The greatest lesson Buffett teaches isn't how to get rich quickly. It's how to build wealth slowly, intelligently, and sustainably. And that may be the most valuable lesson of all. Many people think Warren Buffett never makes mistakes. That's simply not true. Even one of the greatest investors in history has made costly errors. Buffett has openly admitted mistakes such as investing too late in certain opportunities, holding struggling businesses for too long, and sometimes avoiding industries he didn't fully understand. But here's what separates Buffett from most people. He learns from every mistake. Instead of hiding failures, he studies them. Every mistake becomes a lesson. Every lesson improves future decisions. Most investors lose money and blame the market. Buffett loses money and asks, "What can I learn?" This mindset is one of the biggest reasons for his success. The goal isn't perfection. The goal is continuous improvement. Because in investing, avoiding every mistake is impossible. Learning from every mistake is what creates long-term success. After decades of studying Warren Buffett, people often ask, what is his greatest secret? The answer isn't a stock. It isn't a business. And it isn't a complicated investing strategy. His greatest secret is consistency. Buffett consistently learns, consistently invests, consistently stays patient, and consistently allows compounding to work. Most people underestimate what can happen when good decisions are repeated year after year. Small actions become large outcomes. Tiny improvements become extraordinary results. This is how wealth is built. Not through one perfect decision, but through thousands of smart decisions repeated over decades. Consistency may sound boring, but it is one of the most powerful forces in the financial world. And Warren Buffett is living proof of that truth. Warren Buffett's story isn't really about becoming a billionaire. It's about understanding how wealth is built. Start early. Keep learning. Buy quality assets. Stay patient. And let compounding work for you. These simple principles helped Buffett become one of the most successful investors in history. And they can help ordinary people build extraordinary financial futures. Remember, wealth is rarely created overnight. It is built slowly, intentionally, and consistently. The best time to start was years ago. The second best time is today. If you enjoyed this video and want more investing lessons, wealth building strategies, and financial education, make sure to subscribe and join the Wealth with Mark community. Because the more you learn, the more you earn. And your journey to financial freedom starts now.